So we're going to talk about the central bank digital currency. And I got confused in the beginning because I cannot really see how is it being different from the cryptocurrencies, right? Because basically, like the CBDC concept is that they're trying to put out like some virtual representation of fiat currency. Yes. But then like different from the cryptocurrency, of course, like they're being managed by the central bank, who can determine like the rates, interest rates, and like the supply in which they are being issued in case of like some financial fluctuations and stuff. So yeah, can you help us understand like how is it being different? Because it's really confusing, you know, like what's the difference between cryptocurrencies and like the digital version of fiat currency? Maybe that will be my first question. Yeah.
Sure. Oh, so if that was your first question, I go ahead and answer to it. And it's in fact very interesting as this trend, all the central bank will issue their own cryptocurrency. If you think well, when you go to the bank, all the money you're moving are just numbers in computer. Even when you use your own banking, you're not looking at actually banknotes or coins. You're looking at numbers that are in a computer, right? What's the difference from that to the cryptocurrency of a government? Surely not all the government are thinking to use blockchain. That's the first of all. So it's not that the release of this crypto fiat, let's call it like this, is going to be on blockchain. That's the first misunderstanding. Some want to do that. Surely it's going to be a very particular blockchain, because I doubt any central bank let a currency being uncontrollable, so they cannot print more or remove from the market. So they need still the capacity to control inflation and deflation of a currency. And so it is in a blockchain, it is in a central system, is going to be anyway controlled. Else, why not to adopt directly Bitcoin or creating a token on something else, right? Second thing, the difference between the numbers we see in our mobile app when we access the bank, they are crypto, if you want. They are numbers that represent money, they're not physical money. And what is the intention of put out is probably just the management of this. So the money I see in my mobile application when I access my bank account are related to the bank that I have account on. Let's say if I had an account with a central bank, probably I will see my money that are in my hand issued by the central bank. So central bank print cash. I have cash under my mattress. The cash, if it become digital, will be represented not by my bank, because I'm not leaving my money in custody to the bank, but will be represented by the central bank, saying this stack of cash are in the hands of Roberto. Obviously, to take my money when they are under my mattress, they need to physically break into my house and go under my mattress and take my money. When my money are controlled by a system that is in the hand of somebody, and they know which are the money, the banknotes, if you want, crypto banknotes that are in my hands, they can easily freeze them or do whatever they want remotely without coming to me. So to summarize, in my opinion, the central bank cryptocurrencies are the equivalent of your bank account when you connect with your mobile app to move money in your bank. Are the numbers that you read that are not physically in your hand, but you can send to somebody else, etc., etc. Most central banks are actually adding API to this, and this becomes more interesting because in the moment that while I'm in the bank account in my bank, either I use their mobile application or I cannot see the numbers that are there. with the central bank digital currency, I can use API to make an application for example, somebody is paying me on my e-commerce and I can control this, or I can hold and lock some funds in order to give value to something else. So there are more interaction that are directly between the person or the software and the central bank, removing the bank between the parties, right?
And then actually, in a sense, when you talk about the amount of money stated on our deposit, like our account, actually like the bank is using the money, like investing it elsewhere or lending it, to be more exact. So lending it to someone else, but then like to maintain the liquidity of the money, they rely on a positive cash flow, right? So like that's what you mean by when you say that the money is not actually there.
That is behind the scene. Obviously, there are a lot of beautiful or ugly things that happen that we don't want to know. But to the feeling of the user, once I open my own banking and I see that I have a $500, to me, those are my $500, as much as if I had them in cash in $100 bills in my hand, right? So, and I can send it to you, transferring them via bank, or I can give you the cash and you get the money. So to me, it's just a digital representation of my money. And there will be no much difference. The only difference is that it's not your bank, but are directly the central bank. So like the cash, the banknotes that I have at home are not in the hands of my bank, but are controlled by the central bank, because the central bank can say tomorrow they're no more valid, you need to have the new one or something like this. The central bank, digital currency are the equivalent of the banknotes, meaning that once I have them in my wallet, in my cell phone or whatever, they're not connected to the bank, but they're directly managed by the central bank. It will make easier and cleaner and safer to walk around with more value in your pocket, liquid value, let's say. It is to see how it's going to be implemented on the user experience part of it. Let's say I want to spend money on something that is not illicit. Let's say there is somebody that sell stolen motorcycle parts, and is well known, which is his account, and I try to spend there. Would I be able to block my spending because the recipient is not an authorized recipient? While if I'm gonna give this person cash, nobody is gonna be there to discuss my spending, even if it's illegal. Will the audit trail that I leave behind me be able to put me in trouble in the future? Let's say I thought this was a legitimate sales part dealer, and comes out 2 years later that he actually was only recycling stolen parts, and I spent a lot of money there. Would I be investigated because I am suspectly, purchasing things that are so the practical advantage compared to cash is the fact that it doesn't physically take space and it's harder to be taken from my hand or stolen from my house, right? On the other hand, there is a huge amount of other aspects. It all depends how they're going to be implemented. They're going to be implemented with the zero knowledge proof so that nobody knows how they're circulating. I doubt. Or even if they claim so, there is somebody going to validate the claim. So there's a lot of questions that they're going to see an answer only when they're going to be deployed, right?
So like basically the plan with the CBDC is to do without the lenders. So like basically like the digital money is controlled directly managed directly by the central bank. Yeah?
Well, it is today with cash, if you think it is, right? So in the moment that you are having cash in your hand that is being printed by the central bank is in your hand, but it's going to be controlled electronically. Will banks lose their job? I don't think so, because banks are always essential in offering a lot of financial services, loans, and other things. Okay, there is the DeFi that probably are going to give them trouble, but in the terms of central bank digital currencies, that's not going to be an issue. I think mostly what we are going to face is a long period of time where they're going to be co-living, the digital one with the physical one. And then in the moment the physical one is totally removed from the streets, we're going to have a lot of people that is challenged with the technology, that is going to have a much harder time handling cash, let's say digital cash.
Yeah, so basically like the precedence of this plan is the transition toward the cashless society, is that true? And with the rise of the fintech industry. Okay, so now, yeah,
obviously in the moment that all the population managed to live and work with only digital currencies, then it's going to be much easier to manage everything. Cash costs a lot of money because it's counterfeited, while cryptographic cannot be counterfeited. So you remove all the possibility from a lot of people to put in the market currency that are not real, and deflating the value of the currency. Second, you can follow the money much easier in the moment that they are digital. So it's going to be interesting to see how now every police investigation reason with following phone calls and position of cell phones, that we have like a geolocator with us in our pocket constantly. In the moment the money are equivalent to that, it's going to be easier also to understand who paid who. Let's not forget the criminal tend to be stupid, so they do very basic mistakes, right? So I think that cashless society is going to have a lot of advantages, a lot of disadvantages. So you're going to think about this. Credit card companies sell all your profile data to companies that make advertisement. For example, when you take any credit card, you are authorizing them to do so. So much that when you enter a shopping mall, there is the biometric advertisement that recognize you, knows how much money you have, how much money you spend, what kind of item you purchase regularly. It's going to show the correct advertisement. I wonder, in a moment that all my money are controlled digitally, if they even know when I'm walking in front of a Ferrari car dealer, if they know if I can afford one or not, and based on that, approach me in a way or in another, right? So much less privacy in terms of what is in our pocket, for sure.
Okay, so it's still a centralized system, although like this. So the term digital currency should not be confused with cryptocurrencies. Yeah, they're different.
They are substantially different. It's gonna, most probably the big advantage there is gonna offer a bridge between the two. So an exchange or the possibility to leave fiat currency as deposit for some cryptocurrency is going to make it much easier. At the same time, if the rules, the legislation says that I cannot purchase cryptocurrency, as soon as they audited my central bank digital currency to be used to purchase cryptocurrency, maybe my wallet is blocked and I cannot go buy food. So they need to pay a lot of attention on how they limit people from using it, because then people is gonna go back to have gold coins and use them to make purchases. If the risk to have all your money in a cryptographic form and controlled by third party means that this third party can decide that you don't spend them anymore, right?
Oh yeah. Okay. And actually, like, this is the concern of some observers, because they believe that the digital banking, no, not the digital banking, I mean like the fintech industry still doesn't have any sound business model. And then like the current financial system is based on the lending mechanism. So although now like we can use the peer-to-peer lending apps, so we don't need to borrow from a bank. But then like the big companies at least are still borrowing from banks. But then like once the companies can also lend from the peer-to-peer lending apps, they're afraid that it can result in a collapse, but who knows? We'll see.
It is to be seen as things go ahead, I guess. Think though how people that buy drugs, once they have no chance to pay in cash, there is no more means for them to pay. Surely they cannot buy drugs paying with central bank digital currency, right? Because that will be easily tracked once the drug dealer get caught. So either they're gonna go back to barter, they're gonna bring computer parts, they're gonna bring other things in order to have a safe transaction. And probably it is gonna cause a lot of new kind of crimes, because once you cannot use cash, people need to use an alternative to cash, and what they're gonna resort to is gonna be to be seen. But I do believe that alternative to money issued by central banks are growing daily today. In the past there was a matter of credit from Second Life, video games, Amazon gift cards. Amazon gift cards are cash, are clearly used as cash in many places. I saw people purchasing food in a small store and pay them with Amazon gift cards, right? And because they circulate like cash. So surely there is always alternative. I think in the making of central bank digital currency, there must be a lot of good thinking on how it works and what limitations are put on users.
Yeah, and then when you say that the digital currency can actually bridge the conventional decentralized system with the cryptocurrency system, what do you mean by that?
No, there can be a bridge between the two, meaning that now if I have a cash and I want to buy crypto, either I like Bitcoin or Ethereum, either I meet somebody and I give the cash and they transfer me the crypto, or I need to make a bank transfer or whatever else. With a central bank digital currency that can be managed also via API, meaning that people can build a software that deal with the money directly. So it's not only people with their wallet on their cell phone, but they can have an application that control money. That is an easier way to speed up procedures or lock funds in order to give a guarantee. So the same system where you go rent a car and they lock some funds on your credit card that has a guarantee for damages per se, you can actually lock funds that are cash equivalent, digital equivalent of cash. So it will make easier to, for example, get a loan or rent something directly without having to have a credit card, for example.
So it will synchronize like the two different systems.
There are people that cannot have a credit card for past credit score reason or whatever else. Without a credit card, it is impossible to rent a car, for example, because to rent a car you need to have a credit card, because the car rental rely fully on how credit cards works, because that's the guarantee, right? In the moment that there is a central bank digital currency that can be put on hold or can be frozen by one party in a contract, they can be used to create the same effect of a credit card. So you can leave a guarantee. They are not allowed to spend it unless there is a dispute, but they are guaranteed that the money are there in case something happens. And this put the two party, more peace of mind. And car rental can be done with cash for once, right? That's one example of an advantage of having a central bank digital currency. to replace.
Okay, and about cryptocurrencies, actually, like it's also interesting to see how the supply is being managed because it's decentralized system, meaning no central crypto banks, whatever, right? So like, how is the supply being maintained? And then like, in case of value fluctuation, then usually how the system corrects itself or the market corrects itself.
Well, if you centralize, it's simply something that they can do by entering number in a computer, right? At the central bank, they say it is the quantity in circulation. They need to print 1 billion, 1 trillion more. They just press the button, 1 trillion more worth of dollar in central bank currency are in circulation or given to that bank. If they use a blockchain, which is would be surprising, it should be a very particular blockchain coded in such a way where they can still do these things. If people is practical with the ERC20, there is a smart contract to create in ERC20 where a special account can create new coins when they want or burn coins when they want. That would be the same thing, right? Pretty much.
Mm-hmm. Yeah. And then actually how the fiat and the cryptocurrency can actually complement each other. Because now we can basically, we keep exchanging one for the other all the time, right?
Yeah, in fact, in the world of cryptocurrency, there is what is called stablecoins. So people create a special cryptocurrency that are always equal to €1, always equal to $1, always equal to one whatever it is. And there will be one party, there is the guarantor, that manages the reserve. This party says, okay, I have $1 million in the reserve, the $1 million in crypto released in as a token in Ethereum or whatever it is, it will be the guaranteed by this deposit that there is. It's though harder to go and check the deposit is really there or not, right? So it is a little bit on the trust. This gives a stable value. But with the central bank digital currency, it will be easy for anybody to validate that the deposit is there because is information that can be produced and can be validated. If I cannot validate that the crypto you're giving me is true, like let's say central bank crypto, and you want to buy my bicycle, when you pay me, I need to make sure that those money are real, right? So in the moment that I can validate this, I can validate that somebody has a certain deposit as the base. So in the case of a stable coin, there will be, let's say, because the stable coin can do things that the central bank digital currency cannot do. So I still need to use the stable coin, but I know that the person giving me the stable coin has the deposit to give the value to my stable coin because he's in a central bank digital currency.
So like in a sense, like for the stable coin, like the value is being pegged to a certain level or like a certain exchange rate.
To a fiat currency directly. So you have one USDC equal one USD. So there is no exchange in the middle, it's 1-to-1 always. In the moment that need to be kept in the marketplace, the value, there is going to be a lot of pumping, purchase or a sale of the coin in order to keep it to the same value. In the moment there is a digital currency, a digital government issue, a central bank issue, digital currency behind, is a direct, aspect of value. It depends what can be done. What can be done in order to be used in conjunction with cryptocurrency. We don't know until we don't use them. Some government already tried this. Singapore, still many years ago, the Central Bank of Singapore has issued, I think they put a few $1 million of Singapore dollar on hold, and they created the equivalent as digital money in a central way, and then they open the API to the people in order to let people try and build application on top of it, which was interesting. So I think that until is little money, and until there is, to experiment, Singapore has the approach to let people do whatever, and they come later and regulate when they realize what can be done or not. It's hard sometimes to regulate beforehand when you don't know what can be done, right? So the approach is what they use.
Yeah, and then like the cryptocurrency also has like a program which manage like its supply and the value.
But we're talking about central bank crypto, or we're talking about blockchain cryptocurrencies.
The blockchain cryptocurrency. Yeah, that's the distinction which I should make actually. Yeah, the blockchain cryptocurrency. I mean.
No, there is no. I mean, the value of a cryptocurrency is given by the market, how much people buy, how much people sell. There are some DeFi, decentralized finance, smart contract, to create a stable coin. What they do, they automatically, with some bot connected to some exchanges, keep buying and selling in order to maintain the value fixed to. So they can see other, in order to create stable coin, they look at the exchange rate of various other, let's say, people live for liquidity, Bitcoin, Ethereum, and many other cryptocurrencies. They look which is the value of these cryptocurrencies against other of the fiat currencies. So they give fiat currencies value to this package of currency, and this give the value to the coin that is generated, and they can keep it, so they can add, so it's automatically more coin added, more coin removed based on the value that is created, so they keep it stable in this way. Very complex. I think if central bank digital currency are going to be able to be bridged with the blockchain and non-central bank cryptocurrencies, they're gonna make this bridge much easier.
Okay, so I think that's all from me.